All right, hello, Tommy Sandvik here with the Bull and Barrett Traders, and today I'm going to go over again our zone trading and show you an example of a trade that I saw coming and took, and then how I was able to squeeze a little bit of additional trades out of the same overall concept. And so once you get comfortable with this and confident in it, you can start to apply these concepts as well. So without further ado, let's get going. Okay, so first of all, don't forget, subscribe to our channel. We'll be putting up a lot of videos going forward. And also we're doing a 90-day sort of success plan for binary options. So make sure that you check out the link below the video to opt in to receive that as soon as it becomes available. And the idea behind that is it will be everything that you need to get on the path to success. And then, of course, you will continue to grow and develop with these concepts. So if you recall, we've had these 4-hour zones drawn for a while on the euro dollar. It has basically been ranging between these two zones. Super simple to pick out. We had a little bit of a middle zone here, which we'll keep an eye on for the future because we did see a level of rejection there. But although not as strongly as we would like to see. And we had this area down here where we had a lot of rejection as well. So this morning I woke up and I saw that price was moving very quickly towards that zone. Actually, last night I noticed it was moving down there. So I just made sure I had my alerts set on MT4 to trigger in the event that it gets down to the zone area. It hit overnight. Basically at the, it hit overnight, and then it came back up, and then it started moving rapidly down there this morning. So then the next 4-hour bar is when I started to target to take a trade. Now the rule is the last hour of the 4-hour bar is the ideal time to be able to take the trade where you have a strong indication that it's going to reject. So if you look back, you could first of all, let's take away the lines. So I'm going to show you how I draw the lines. So all I'm doing is, because this is a zone that's been revisited several times, we've got a couple great areas we can pop a line. One of them, and this is all based off of the close of the 4-hour bar. So let's start with that. So the close of the 4-hour bar, we've got a line basically here. Now this is going to be what I would consider the highest risk line that you can take, because it is possible the 4-hour bar, this current 4-hour bar, will close a little bit lower than these previously established closing price levels. So I would say you always want to go for the best that you can. So I would say, okay, well, where else would be our target strike? Well, we have this here is the bottom of the zone based on this candle. That's where the zone was actually really formed. So you have the bottom of the zone there. So you could set a line there, all right? And then you could set your line here where the 4 hours have closed. And you can do an additional one based on the wicks. So if I'm going to go on the wick of the 4-hour, I want as many to touch as possible while still leaving a little bit of room. So I'm not going to go all the way up here. I think that's a bit tight. So I would probably go down here. And again, you're looking for highest probability, the best entry you can possibly get. So you go down there. Okay. So this 4-hour bar, if we flip now, let's flip to the hourly. Whoop. So on the hourly, you'll notice that the lines happen to coincide with the hourly bars, with slight exception. It maybe go a little bit lower. Okay, so there's your hourly line. Okay, we had a close, a close, a close, a close, a bounce. Okay, so you go down to the hourly, you can get a little bit more minute detail into where you're drawing these lines. All right, so now, look at this. So now we go over here. Price came down, pushed into the zone, quite heavily. So again, your first opportunity to take the trade. Now this is going back before this current 4-hour bar. This is actually in the last, I'm sorry, it's in this current 4-hour bar, but it's not the close. So this is at 1700. We're currently at 1928. So this is a 1900 bar, okay? So you had this big push right here. Well, it closed down below this line here. So I'm going, you know, really iffy. Now again, this is not the last hour of the 4-hour bar, but if you're looking for ways to take additional trades, you can do so. So I waited, and what did it do? It went all the way down to the bottom of the zone, actually went outside the zone. If you flip over to the 30-minute now, and here's the 30-minute candle that went all the way down. So on the 30-minute candle, I said, you know, no hourly bar has closed below the zone, right? Look here, hourly, right? And hourly was a touch, but no hourly bar has closed below the zone. Good probability, since we're below the zone, good probability it's going to pop back up. So at the end of this 30-minute bar, I took a call. And that call won by quite a bit. I also opened a Forex trade, which you can see down here, which is currently 24 pips in profit. So I said, oh, great, I won. That's wonderful. Now we're at the, once that trade won, then we entered into the current hour, which is the close of the 4-hour bar, which is what I've indicated before. So you have to understand the differences and relationship between these bars and the closing of the bars and how much that can affect how price moves. So that's why I take very few 15-minute trades myself anymore. They're almost always a close of the half hour, a close of the hour, or the close of the 4-hour. I prefer close of the 4-hour, then close of the half hour, I'm sorry, then close of the hour, and then close of the half hour, all depending on what I'm seeing. So what's happened here then is you notice in the current hour, now remember I said like for the 4-hour, let's flip back to the 4-hour. Remember this line here. This was your best line was the one here, and then the secondary best line is the one pretty much where price is at right now, a little bit more risky. So actually, price was in the current 1-hour bar, price dipped below that best line. See that? Because you got a little bit of a wick down there. That's where I took the trade. For a call, end of hour, and it's currently obviously doing well. So I wanted to show, I mean, if you actually broke down even more into the 15-minute, as it so happens, you basically have 1, 2, 3, 4 bull 15-minute candles for sure. If you took every one of these on a call, you would have been at least 4 and 1. This one might have won depending on what your strike rate was. I can't see. It is a bull, but it's very small, so with brokers and such, you don't know 100%, right? But point is that definitely an opportunity. Now, it's not always going to go like this when you reach a zone. I'm just saying that you can start to, by draw the 4-hour line first, and then look at the past with the hourly, okay? And then you can even look at the past with the 30-minute, and you'll see, sorry, we'll go back a bit. The 30-minute pretty much matches the hourly in terms of, you know, a little bit deeper here, so maybe you end up going here if you're looking at a close rate on the 30-minute, which is interesting because, lo and behold, this bar that came down closed above that lowest 30-minute line from, you know, days past, right? This has been a month, so, you know, it closed higher than that. So those are the things you can do to analyze, look at where price has closed in the past, understand the relationship of the time frames. When is it a closing hour of a 4-hour bar? When is it the closing of a 1-hour bar? And understanding that will will definitely help. I have found much better timing success by using higher time frames than using lower ones. So, I might take a trade off the 15-minute chart, but almost always expiry end of hour based on where I want price to be or where it's showing me. So hopefully that helps. Continue with the zone trading concept. This is a great thing too. I had someone come to me today about Forex and whatnot. I mean, these zones are where, if you're going to eventually branch out in the Forex, these zones are where you can take the Forex trades. I mean, I could bank 28 pips today right now if I wanted to. I think this is probably going to pop up some more, so I'm not going to collect profits. But that's this is the big thing. Here's two zones. Price is attracted to these zones. It's either going to go up to the top one or down to the bottom one, and eventually one of them will break in a given direction, right? That's how the market works. So when people say you can't make money on holidays or there's this, that, or the next thing, it doesn't matter. At the end of the day, price is attracted to these zones, and they're going to retest them, and you have an opportunity. This is also why in my initial video, I pretty much indicated like, oh, hey, you can get the bounce out of the zone, like basically saying, take this trade. I definitely don't really recommend that anymore. You're much better off, much safer. You can do it if it's the first touch in a long time. So like here, we had a touch, and it has not touched since, the last time it touched was the 18th of December. It's a couple weeks. So if there's a couple weeks and it touches, yeah, you could probably go ahead and pop a call off this zone. I would have ended up, see, it didn't actually touch my blue area, so I probably would have ended up not taking it, but this would have been a potential opportunity. However, after that, I would not take the touch of the zone. If it's going to come down again and it hasn't been a significant amount of time, multiple days, a couple weeks, I would not take the bounce. Let price come into the zone. Let price then show you where within the zone it's going to play, where it's going to reject, and then take the trade based off that information, which is very much what I started doing here, using the past as an example, drawing the lines out within the zone for where I think it's going to ultimately reject. Now, had we had this big push down out of the zone, it's quite possible that we would have had a break of the zone, which would indicate price is probably going to go lower. Had that happened, then obviously I wouldn't. I was going off of the expectation that would come up. Of course, I could have been wrong, but that's why you just take the one trade, and if it doesn't go as expected, then you accept it and then see what price does. There's been cases, I think EJ, so like EJ broke the zone and never came back. So this is a good example actually of a break of it was a small zone, not the strongest, but a zone nonetheless, and it broke and just kept going. So obviously in that case, we had the 4-hour bar close below the zone, then that's, I'm not looking for any trades off that level for a while. Okay, so hopefully this is helpful. Again, subscribe, sign up. You know the drill. We will be live tonight, which is exciting. So thanks so much. This is Tommy Sandvik with the Bull and Bear Traders.